The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Looking good, Billy Ray. Feeling good, Lewis. Good morning, everyone. Well, we've got a lot of things going on. I think that the thing that you probably ought to pay attention to, I know most of you don't look across the pond very much, but I've posted into Tiger TV here today the chart of Deutsche Bank. That is the largest bank in Europe. It is the flagship of Germany. And folks, it's trading below 23 today. It's between the $23 and $22 per share level. That's that 1.618 expansion here. Anything below that, and you're going to be looking at Lehman Brothers. This thing has got a chance that I'm sure they're not going to let the bank go down, but that's going to have to take some serious help. The problem is what do they have on their books as far as outstanding paper and debt? That's the real problem that we're looking at. So you want to be aware of that. Also, on that same vein, I wanted to, we've been talking about this debt market for a long time because we believe, this is what I believe anyway, is where the real problem lies. If we look at the junk bond market, we've been following this for quite some time. You'll notice it's also collapsing quite a bit. So the credit markets are beginning to look like they're in disarray at the time when the Fed is supposed to be raising interest rates. Whether they will or not remains to be seen. But this Deutsche Bank is very, very important because of the fact that it's in such big, it's in big trouble. I don't know exactly what it is. Another one over there is, of course, Volkswagen, and it was taken out of the FTSE index today. I don't know what it's being replaced by. So we'll see what, we'll see what's going to be happening with that, but we'll have to wait and see. We're almost ready to go below the 786 retracement in the S&P 500 down here at the 2050 level. That is another indication that we're probably getting ready, for another leg down. I would post the chart for the breadth index, but if you would, I mean, I would post it, but you wouldn't believe it. It looks so bad. There were more new lows than new highs by such a large percentage these last couple of days. It's scary. Somebody is selling the heck out of stocks, folks. I know there's a couple hundred maybe 50 to 100 stocks that are making this thing hold up, but boy, the rest of them really look bad. I haven't seen it this bad in a long time. It's just not. It's not very good. If you look at the Dow Jones Transportations, it is even scarier. And where is it? I just put it up here. Oh dear. This is the problem when you do too much, is that you can't get it all together. I had a lot of requests for stuff today too, so I want to get into that. And I'll not worry about the Dow Jones Transportation. I'll try to do that at the break. There's a couple of markets here that I think are important to watch. Yesterday, on the weekly chart, we hit a very important spot on the January crude oil. That came in exactly at 36.71. That was the 1.27 expansion from the low on August the 24th to the high on October the 3rd. That came in exactly at 1.27. So there's a really good chance that oil could hold at this level. However, anything below that 36.50 level sets up another 12 to 15% down to the 1.618 expansion around the 32.56. But we've really got a chance, folks. They are ramming the oil deal down our throats on CNBC and Bloomberg like nothing you haven't seen, except for the fact that how bullish Apple is. I mean, they are really talking about how bad it is with the tankers out there, no place to store oil. All the salt caves are filled with oil. They're saving oil in glass glass jars in Utah. I mean, all these things are telling us the news that the oil prices are lower. Duh, we already know that. You know, it's trading below $1.80 a pump here, and for gasoline here in Tucson. So the news is pretty out. So what we want to do is we want to watch these levels very close. If we can hold this 3670 level in Jan crude, we've got a chance here for a pretty good move. We're looking at the same thing in some of the other markets that are also you know, trying to bottom. And one of these, we requested to bring this up by Mr. Z here in the den, and I certainly want to be able to do this for him because he's one of our favorite people. And you'll see that this natural gas is getting ready to make a potential double bottom down here at $1.90. So there's another one of the energy complex that looks very, very interesting. We want to take a quick look at the heating oil because it also is making a huge double butterfly pattern going back to September, and so we're also looking at that one as a potential for a bottom. So they may or may not happen, but you want to watch it. And when you're looking at the news that they have, they give us this. You know, they feed us this news, and we should, because that's what their job is. But you know what that's doing is it's telling you that somebody is always on the one side of the market. That's what happened with the euro. You know, when euro was down there at that 105.50 level, the whole world was, including me, I thought it was going to go lower, but I didn't think it was going to go lower from that level, because that, you know, we had a big ABCD pattern at that 105.50 level in the euro. So the same thing is happening in oil now, so pay attention to it. I think if we can get oil above $39 now off of this bottom, then you're going to get a pretty nice run. Those were a couple of the questions that we had. Now, another question that we'll talk about in just a minute is the gold market, because we've held good support. We came within $1.50 of the exact 61% retracement at 1160. We got down to 1162.5. I believe 1161 was the exact 61% retracement, and now we're attempting to get above the 1090 level, which we made 1092 level that we made just the other day on that when we had the big run up. If we get above that, you know, we set up an ABCD structure, you know, to taking us at least to 1130, it is 1130. Yeah, it's 1100. That would take us to 1130 on the next swing up, if that's in what we have possibly going here. The question is, if it can do that, then you know we've really got something to see if it's going to do that. We really need to get above the highs of that 1110, 1120, and that'll tell us that we're starting to move higher. Watch the pullbacks, because you know we got a $17 pullback from the high. I believe 16, 20. Yeah, almost. Yeah, it was exactly $17. So we should be in the section where we should be going higher in the gold. Whether it breaks it out today or not, I don't know. Maybe it'll reverse here. You know, we'll have to just to wait and see if that's going to be the case. But kind of keep your ears to the ground about Deutsche Bank, because they had the CEO on Bloomberg this morning. I listened to him talk for a little bit, and he basically made a call to arms to all of the people involved with Deutsche Bank to stand together, shoulder to shoulder, to get through this. Well, let me tell you about shoulder to shoulder. If they get in trouble, those shoulders will disappear faster than you know, rats leaving a sinking ship, because these companies, they save themselves first and they worry about the employees second, third, or fourth. That's the way that they actually you know, go through the pecking order of that stuff. So keep in mind that could be, you know, something that is really happening. Now, we had one other request to take a look at soybeans, and I'm going to do that on a short-term basis here, going over the last couple of months, just so we can take a look at it. I don't really think that's where the real play is. I think the play is in the stock market and in the and in the gold market. And also the crude oil market. I think those are the ones that are going to offer the best opportunity here on some of these things. And then we could have some good moves in beans, but as you can see, we had some nice ABCD patterns in the beans into October. We made new lows and we rallied up to a 786 retracement. From that level, we dropped about 25 cents. So we're going to come down to the 61% retracement here, most probably in the next few days, at around the 872 level per bushel. And if you wanted to take a look at it there, that would be a spot to to buy it, and you wouldn't have to risk more than about 10 cents to see if you were correct on that. But I think that the grains are better to be looked at right after the first of the year. That's just the way I see it here in the beans. It's an easy trade, I think, but it's not something that it's just not on my watch list. Let's put it that way. Now, the next one that looks pretty good also, that is even actually much better than the bean market, and that is the corn market. And the real beauty about this corn market is we've got so much corn. We've got almost as much corn as we have oil, if you can believe that. In fact, that's one of the reasons why the ethanol has pretty much given up the ghost, is because oil has gotten so cheap. But look, we've had 1, 2, 3, 4 higher bottoms now here since our lows last September. We had this huge ABCD. Rallied into July. That was a perfect ABCD, and that's when the seasonal highs usually occur. Then the market backed off, and we came down and made a higher high in August, and we made another higher high in November, and we're starting to gradually move a little bit higher in corn. So keep an eye on the corn market too, because this, like they say, food, soybeans and corn are indigestible, so they're always going to be in really good supply from what we're looking at right here. Okay, now the next one that we had to look at, I've had requests for, is CMG Chipotle Mexican Grill, the most expensive taco stand in the world. Also, they have affiliated shares with Tufts Memorial Hospital and Peter Bent Brigham in Boston for the patients that come in after they get sick. I really should. That's terrible. Judge's ruling, that's a bad one. I won't do that again. I don't mean to do that. Okay, let's forget and get back on this. The CMG, if you look at the low from 2009 to the high in 2012, and then the corresponding 50% sell-off, we made an ABCD pattern up there at that 750 level. The high on the stock was 758, I believe. And since that time, we've had a pretty good sell-off. Now, the news has been bad, but you notice the market this week is actually up, even with more bad news. So we're probably getting ready to have a rally in this, but it's not unusual for this thing to give up a lot more. The rally the correction that we had during 2012, the one that we've had so far has been a little bit greater than that. So we'll just wait and see what's happened. That's what it looks like. You can see the top that was made up there, that 3 drive to a top pattern. That's the 1, 2, 3, 4, 5 expanding top pattern, known as the reverse point wave. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we're going to take a look now at the Canadian dollar versus the U.S. dollar. This is actually the U.S. dollar against the Canadian. In other words, if you're looking at the Canadian, it's been going down versus the dollar, but the way that I chart it is the other way. It's traded with the dollar going, with the Canadian going lower. But what I wanted to show here is the fact that this high that we had so far this week, the high came in at 136.35, and the 1.27 expansion on this move that completed the butterfly came in at 36.27, and we're trading about 80 pips below that now. The reason why this cross rate is important is because it has about a 90% correlation with the price of oil. That's how important the oil stuff is out of Canada. So this is a very important proxy when you're looking at the oil market. You could actually trade, the Canadian dollar against the U.S. against the oil market. Now, if you were to invert the oil market over this chart, you would see that this correlation is just absolutely phenomenal. It's in the neighborhood of around 85%. And sometimes it's 100%, but it is a really high correlation. So we want to watch this because this is certainly a topping pattern, and it trades really nicely as far as all of the patterns that we're watching. So we want to keep an eye on keep an eye on this for sure. Now, we've made in the pre-market, we've made a lower low in the S&P than below our 786 than yesterday by a half a point, which is nothing. All that happened with the NASDAQ is it completed the 61% retracement. So the NASDAQ is still the most bullish one, and we need to get those. You need to get below 1040, 2045 in the S&P in order to have any type of bearishness of going to see what's going to be looking at. Now we're at we're at a key level here in the gold now at 1085 per ounce. If we can pop through that, then we've got a chance here to see another leg up. But it's been following the numbers of the Fibonacci summation sequence pretty nicely. We came off our bottom at 1050. The low was 1045. We rallied up to the 1088 level, and then we backed off to 1060. So we came down $27, and now we're almost back to those highs. And if we pop out again, here's a situation like we've had in oil and in the euro and other things. You've got markets that are tremendously oversold. I mean, every day on CNB, we had one on with John Logan today, and I certainly respect the man's opinion, and he thinks gold's going to go below 1,000, and maybe it is. It certainly could, but I think we're going to have one heck of a rally before we get to that spot. John Logan has some really smart people on that show, and that's one of the reasons why I try to listen in. And the gentleman from Medellin, Colombia, was incredibly well versed about what he was looking at, and you certainly have to respect those things. But when these markets get oversold, they can really have one heck of a rally. So we'll see what's going on with that. Now, as far as Donald Trump is concerned, I know you guys are making fun of me here about being another Donald Trump, but I'm certainly not. But the main thing is we need somebody in the government that's not a politician. Give me a break. Well, we got one in there now. What am I talking about? I better shut up before I get into more trouble. Okay, we're going to have a quiz, boys and girls. I want the person that gets the answer to this gets a big prize. And I want you to take a look at this. This is a picture of the Apple watches that are out there, but I want you to notice that they're all set at 10:10. The next time you're going through a magazine or you're watching something on TV with a wristwatch or a clock or something, you'll notice that they're all set at 10:10. Now, what is the odds of that all watchmakers, whether it's Patek Philippe, Vacheron, Constantine, Rolex, Omega, Timex, it doesn't make Bulova, it doesn't make any difference, what they are. They always advertise the watches, and they're all set at 10:10. And that's different advertising companies, folks. So there's got to be a reason why these watches are set at 10:10. And if you get the answer to that, you get a prize. And I'm the prize to be determined at a later date, but it's a very interesting riddle of why that is, because it's really it's very, very interesting on why that occurs. If I told you, folks, then I'd have to have you whacked, and I don't want to do that. So we'll be able to see it. But it's a very interesting thing of when you try to figure this out. So, okay, that breaks the ice, getting away from all this other stuff. So we'll be back to talk more about the oil markets and the stock markets in just a few minutes.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, boys and girls, and we have our first guest caller from New Hampshire. Lou, are you there?
I'm here, Larry.
What can I help you with, my friend?
I was looking at silver and USLV.
Yes.
I'm wondering if it's a good time to jump in.
I think it's probably as good a time as any. But what I would do is to wait until gold gets above the 1090 level, and if that happens, that's going to break out a high after a correction, and I think it'll pull silver along with it just to be safe. We've got the 1085 today. So what I think to do is I would wait just to make sure that happened, just to make sure that the breakout is real, because some of these commodities are still under a great deal of pressure, as you know, and you don't need to be a hero. So wait a day and make sure that the gold gets above 1090 or silver gets above the 1460 level. Then I think you could probably go ahead and go in and buy it.
Okay, sounds good.
All right, my friend. Happy holidays to you.
You too, Larry.
Okay, thank you. Okay, we got another caller from the Far East, Eastern United States. We got Jay from Boston. Oh, you have an answer for the trivia quiz. I want to hear it.
I hope so. Yeah, it always seems to me that it frames the maker's name when you align those the two hands that way, because the name always seems to sit under the 12, and this is the way you can box it in nicely.
It does sets it up, but that's not the correct answer.
Okay.
It's a lot more. It's a lot more esoteric than that, and in fact, it is so unique that I'm absolutely blown away. And the only reason I'm not giving the answer here is the gentleman that gave me the quiz from London. One of the smartest people I know, by the way. It just blew me away, and he showed me how it all transpired. But when you stop and think of all the different advertising firms and all the different watches, and they all come up with 1010. I mean, hello. There are a few instances, however, where you'll see a watch that doesn't have the 1010. It'll be set at some crazy time like 8:30 or something like that.
Right.
One of the examples was Gerard Perregaux, which is a Swiss watch, but most of them are at 1010. But I will reveal it when he gives me the go-ahead, but not yet.
Yeah, I'll be interested to hear it. Sounds great.
It blows me away. So we'll see. Anyway, thank you for calling in. I appreciate it.
All right, sure thing. Thanks.
Yep. I love Boston. It's a wonderful place. My daughter went to school there across the river, and really beautiful place. Always enjoyed it very, very much. Okay, now we're going to get back to the markets. We need to pay attention to oil market, folks. There is just too many people that are bearish the oil, and I'm not saying that I'm bullish oil. I'm saying we could get a $10-15 rally in oil, and that's a lot of money compared to how much you have to risk at this level. So pay attention, to this oil possibility, because we've got a lot of things that are telling us that we're there. Now, if we take a look at the long-term heating oil chart, we looked at the shorter term, but if you look at the long-term heating oil chart, we went through, you can see when we hit that 786 retracement, we rallied almost 30% in oil in a matter of 4.5 weeks in a bear market. So that's the kind of thing that you could get in one of these things. But the reason is there's just every day they're bombarding us on CNBC and also Bloomberg about how bearish the oil is. And I think if you were to look at the number, if you did a poll of the people that were in the oil or not even in the oil, you'd ask them where oil price is going, you'll get a very high percentage that everybody thinks it's going to be going to the downside. So we'll keep we'll see what happens with the move in oil, if in fact it does start. But if we do get above 39.50 per ounce, that's going to be a pretty big reversal per ounce. They should be so lucky. 39.50 per barrel, then we would have a moving, you're probably going a lot higher. And all we're looking for is a really, really sharp, short covering rally. That's what we'll be watching for in the oil. But it can be substantial, so you want to pay particularly attention for it. That's what I would be looking at, and we would be able to see if that's going to be the case. So we're getting a pretty good rally now in stocks. We got back up to even. We're in the Dow Jones is up about 50, and the Nasdaq is coming back strong, as is the S&P after we made a slightly lower low than yesterday. Also a potentially positive sign. Overall, folks, the breadth of this market is it's really, really in bad shape, but that doesn't mean the market can't rally. But boy, when you look at the breadth of the market, it certainly is something that really is very, very scary, in my opinion, just by looking at it, and we'll be able to see. We'll see. Someone says here in the den that we're going to see 2134 in the S&P, and we'll see what happens. We'll see what happens with this. Okay. The next thing that I wanted to mention is, okay, we got a caller from Florida. Rick, are you there?
Yeah, I'm right here, Larry.
Go ahead. Fire away.
All right. The reason why it's at 1010 is because it looks like a smile that way.
No, that's in the top 4 answers, but that's not the right one.
All right.
But thank you for calling in, okay?
All right. You have a good holiday. Bye.
Okay, thank you. We got Brent from Martinez, California on ExxonMobil. What can I help you with, my friend?
Hey, Larry, how are you?
I'm good, thank you.
Hope it's not too noisy in the background. I'm on the train
No,
again.
it's just fine. Fire away.
I was looking at ExxonMobil as a potential long. It looked like off that low of 66, it went up to 87. And then it's done looks like it pretty much completed a AB equals CD yesterday in that range, and also 618 retracement. Could you take a look at it, please?
Yes, you are correct. I think that's one of the better things to look at. You know, it's a beautiful pattern, and it's got all the things necessary for it. You got all the numbers spot on perfectly.
It looked decent, yeah. Okay, I just wanted to make sure. I'd like to double check with you to confirm.
Yeah, you have it. You couldn't have done it any better. Just absolutely perfect.
Did it have anything to do with the V on the clock?
I'm not sure of that, Brent. That I don't know. But all I know is the pattern that you've looked at is just spot on. You couldn't have done it any better.
Okay. Well, thank you very much, Larry. Have a great holiday, and give my best to your family, okay?
Okay. Thank you very much.
All right. All right.
Okay, appreciate it, my friend. Boys and girls, we have a winner. Someone has answered the question, and it is very, very close. I cannot give the answer out as of yet, but our friend Dr. Scott in Tampa has pretty much got it. He's got about 70% of it. So. Keep it to yourself, Scott. We're gonna announce the winner, but you're gonna get the prize because you're about 60% there. So that's very interesting. Anyway, we'll see what happens. Okay, we got it. Oh, this thing is really wow. I should do a trivia class here. I get more responses on trivia than I do about the markets. Maybe because I know more about trivia than I do about the markets. Edward from Toronto, what can we help you with?
Hi, Larry. This is Edward, from Toronto. Just want to take a crack at this 1010.
Okay.
From what I understand, number 10 is a number of cosmos, and it's a paradigm of creation.
That's really close too. When you add that to what he has, you're getting really close. It's in that vein. It's in that vein, but not quite. So it's really interesting. So. Okay.
Okay.
All right, my friend.
Thank you.
Okay, thank you very much. Let's knock off the trivia because I'm getting more calls on trivia than I am about the market. So we'll see what's happening here. Anyway, keep an eye on this because on this oil because it's got a chance here, for a pretty good move, out of the market here. So we had a really good short covering. Well, I don't know if it's short covering rally or not, but the S&P rallied to be up pretty good on the day, up about 6. The Nasdaq is still down on the day, but that's what we're watching so far, and we'll see what it's going to be if it's going to be the case. Hold on, we got one other caller, I believe. We'll wait and see what we get. Okay, no, we're okay there. All right, it's really funny. We finally got a way to get calls in on the in the room here, because when I get calls, it makes it easier for me to do the radio show, because doing a radio show is not as easy as you might think. You got to try to come up with something new, and it's something that people can use in their trading and stuff. So we want to watch that a little bit closer and each day to see what's happening. But we've got the Dow's up pretty good, the Nasdaq is down, and the S&P is up, which we've got this bifurcated market that's been going on for a very long time, so it's no big deal that we haven't had that. We did make a double top in the euro up there at the 109.91 level. The old high was 109.96, and we've had a pretty good rally also in the British pound coming off that bottom also. So the currencies are still jumping around pretty much. Folks, I know they're having a rally today in the Dow and the S&P and stuff, but boy, the overall breadth of the market really looks really bad. The Dow's up, 46, the S&P's up 5, NASDAQ is down 14. The DAX is down about 90, and if you want to see the bearish chart, unfortunately, I'm unable to put up the DAX chart, but we had a high there earlier last week at 11,000 and change, and we dropped 1,000 points. We're almost ready to take out the lows from November the 13th, which are quite significant. That's around 2020 in the S&P. So those are the types of things that we see in some of these different markets. So that's the main thing to look at. So that's pretty much as far as the bond market goes. We're stuck in this range between 156 and 150. That's a pretty big range because we went straight down and then straight back up again. Interest rates are going higher, folks. The Fed funds rate is going higher. You can see the chart that I put in earlier this morning on junk bonds. Junk bonds are going lower, i.e. higher interest rates. The chart of Deutsche Bank looks like a dying quail. It looks like the Lehman Brothers chart. I mean, the markets can rally on news, whatever they want to, but the overall, picture of this is not very good. And if you look at the New York Stock Exchange Index, it has a series of lower highs. And, and maybe all this turns and the market goes up and we get above 2,100 in the S&P, and we'll get my little trusty little burro Luigi, and we'll ride out into the desert. But right now, that's the way it looks. I wanted to share one other chart with the Canadian dollar, because that shows you what the divergence and things that we're having. This is from our good friend Jim Bartolioni, and we want to be able to okay, there we go. At least we're getting a lot of calls in. People are listening. That's a good sign. I must have to offer more prizes. Okay, we got a caller from where is it from? It's from New York. Marion, are you there?
Yeah, hi. This is Maria. How are you?
Sure. Good.
I have the answer. I think it's Leonardo da Vinci Man.
That's a little bit of it, but not quite. It's
okay.
It's very, very close. There's one of the questions that people answer, Marion, is the fact that it was the time when JFK was shot, and no, that's not the answer. That is not the answer. Thank you for calling in, though, but it has something to do with the Da Vinci type thinking. Let's put it that way.
Thank you. Bye-bye.
Thank you. Okay, we'll see what's happening, and we'll see what we have going on here. Okay, we're going to have a break coming up here now. Let's talk a little bit about this dollar versus the Canadian dollar, because it has such a parallel with the oil market. As you can see from those blue lines that I've got marked there, we're completing this big ABCD pattern. If you'll notice at the bottom of this, the divergences that we're having in the relative strength is also important. You can see the times that this has happened before was an indication of the top of the market. So pay very close attention to this Canadian dollar trade. And in context with that, it's also a companion to the trade for the crude oil. So that's important. Now, it's a very, very important that we hold. I'm going to put this in one more time here, because this level in the crude oil is really important, and that is the level that we have down here at the level of 36.71. We're trading around 37.80 right now. We're $1.20 above that. But if we can get, this is a weekly chart, and if we could get oil to close above $39.97, let's say $40 a barrel, that's $2.20 a barrel. Of course, oil moves very quickly sometimes, but if we do that, we have a weekly reversal coming off the 1.27, and that is a very bullish sign. So watch that relatively closely if you can. So that's what we're watching. We've got a break coming up here, I think, pretty soon, and then we'll take a look here at what's going on from what was going on at that time. Okay. All righty. All right, we'll be right back.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, folks, we are back with the market still rallying. We got the NASDAQ almost got back to even on the day. S&P's up about 8, the Dow Jones up about 75. Now, we've got the last chart that I focused on today is the chart that given to us by Jim Bartolioni, shows the New York Stock Exchange Index, the patterns that are there over the last 3 major highs. That high is the 1, 2, 3, 4, 5 expanding triangle. The rallies from in 2007, we bottomed, we rallied into October. That took 16 weeks. We are now in the 15th week of that rally, coming off of August 24th. So, and we have not exceeded the 61% retracement in the New York Stock Exchange Index. We made new highs in the NASDAQ, of course, and we've gone above the 786 in the S&P and the Dow Jones, but the New York Stock Exchange Index has not taken out that 61% retracement, nor has it it done it on the last rally back that we've had coming off the bottom of November the 13th. So it still looks bearish, in my opinion. If we get the S&P above 2110, then all bets are off, and we're probably going to be been going a long time. Someone's asked a question about the loonie, the Canadian dollar being this in 10 years. I think it's been more than 10 years that the Canadian has been that weak. It hurts people here in Arizona because many people up in the Scottsdale, Tempe area bought homes there when the Canadian was really weak, and now they're trying to sell those homes and they're not able to do it because there's a flood on the market. So the real estate market there has been hit quite a bit. So we'll see what's looking on. Yahoo is in the news again, and what you have to love Yahoo, because Melissa Meyer has been running the company for 3 years, and if she does get fired, she has a golden parachute worth about $126 million. Someone told me this. I fainted when I heard this. We'll have to be able to see what's going to happen. We do have a new moon coming up here on December the 11th. And of course, we have the full moon on Christmas Day, so that'll be interesting here. But Friday we do have a new moon coming in, so we'll see what the market does at that time. So we'll watch those. But keep an eye on the oil. If we get oil above $40 a barrel, I think you could see a rally to $50 or $55 a barrel just in short covering alone. And there could be a news announcement at the same time. Sure, we have a lot of oil, but that's happened before and it's had big rallies. Just keep in mind that that's.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.